Blumenthal alongside Senator Elizabeth Warren now calling for an investigation into the key leaders involved in the Silicon Valley Bank collapse. They've sent a letter to the Department of Justice asking them to look into whether or not these bank officials broke the law. Senator Blumenthal said that reports he's seeing show a pattern of risky and questionable decision making within the bank. The lawmakers are alleging possible insider trading, among other violations. It's clearly a big story affecting the entire country here. So what about your money? How does this affect your accounts and your wallet? Do you need to be concerned about the funds that you have in your bank?
President and CEO of Credit Union League of Connecticut, Bruce Adams, joins us to discuss. Thank you for joining us.
Happy to be here.
So a lot to worry about here, about whether our assets are safe, so cash, mortgages, car loans. What can you do to ease some of our concerns?
Well, you know, when you say there's a lot to worry about, I suppose there's a lot to worry about in life, but you don't have to worry about your money here in Connecticut. Your money is safe, whether you're in a credit union or a bank. We just don't have those same concerns as what happened at the other two places.
Why is that, Bruce?
Well, because what seems to have happened at those two banks really seems to be an operational failure. And the regulators, the federal government, moved exceptionally swiftly to really nip the problem in the bud. What happens is when people get overly concerned and rush to take their deposits out, that's what causes more of the problem, because the bank doesn't, or the credit union doesn't always have all the cash on hand that it might need to honor a withdrawal request. And that's what puts them in trouble. So actually leaving your money in is the safer choice.
I mean, easy to say, I guess, but when people make emotional decisions, you know, based on their money, it's a whole different ballgame. One question here. The FDIC covers up to $250,000 in any account. We know that, and you know that when you sign up for any checking or savings account, no matter the bank. At Silicon Valley Bank, a lot of those accounts had to deal with the tech industry and small businesses, so a lot of those accounts had higher balances than $250 that was covered by the FDIC. What happens, Bruce? How did the government cover the accounts with more than $250,000 in excess of FDIC coverage? How did they do that?
Well, they made money available to cover those withdrawal requests, and somewhere along the line, it's going to have to get paid back. There's a lot of debate over whether that was the right thing to do. There's a lot of different concerns on either side of things, but whether your money's insured by the FDIC or with credit unions, NCUA, what we need to remember here in Connecticut is that the inverse is true, that most depositors don't have accounts valued at $250,000 or more. So this is another reason why most people in Connecticut are safe. And if you need advice, if you've got more than $250,000, first, please give me some. And then second, go talk to a person you trust at your credit union or your bank to plan how to keep that money even safer.
I know we have to wrap here, but just last question, because you're representing credit unions here on our air. A lot of people go to credit unions in the state because of your interest rates, right? Whether it be a car loan or a mortgage, those numbers might exceed $250,000 when people are talking about their mortgage. Same piece of advice, same application here, Bruce?
Well, sure, because if you've taken out a loan, the credit union has given you money, so you have it, or you have your car. So the concerns are different on that side.
Perfect. All right. Helping us kind of ease those fears. Thank you, Bruce Adams, for joining us.
Thanks, Bruce.
Thanks, Ben and Sarah.